$100,000. That's how much I made in the last 30 trading days using just one trading strategy. And it boggles my mind that so many traders get trapped by this ICT and SMC approach, especially the new traders, burning their time and money and just overcomplicating things. You gotta guess. Keep it stupid, simple to make money in the market. No guessing, no fancy indicators like RSI, MACD, Fibonacci bullshit, and moving averages, just pure price action with the assistance of market depth. In this video, I will explain the strategy first and then also break down the exact trades I took using this strategy step by step so that you can apply this yourself. First, before we even start this video, I value your time. So I want you guys to understand that this is coming from a trader who has been trading for 6 years using his own money. I started with a $3,000 account, no funded BS, and I'm actually profitable using this strategy. I will log into my Interactive Brokers. This is a regulated US broker. You can't fake your trades on this broker. And you guys can see YTD, I am up 432% of my account. I started this account with $30,000 at the beginning of the year. If you guys want even more proof, I actually made a 10 minutes long video logging into my broker, showing you my trades, my wins, my losses, everything with the broker statement. Interactive Brokers, again, you can't fake your trades on this broker. That's as transparent and honest as a trader can be without sharing my login details. I'm not showing this to flex. I just want you guys to understand that it's not luck, it's a process and it's real. I will link that video in the description box below. Now that I have your attention and you know that your time will be of value in this video, I want to break down the strategy. I call this strategy the market DNA. As we all are made up of DNA, all humans are made up of DNA, all animals are made up of DNA, the market is made up of the buyers and sellers. We have the buyer right here with the money right here, and we have the seller with the product. That's what creates the market, and that's what I call the market DNA. That's the strategy I use. In this strategy, you actually use the price action along with the confirmation on the market depth, actually looking where the buyers and sellers are, and more importantly, what are they doing? Are they getting aggressive? Are they getting defensive? Are they lowering their size or are they increasing their position sizing? Are they stepping up or are they stepping down, or many different scenarios? And this gives you an edge over any indicator. As a trader, you need to understand that market is not made up of indicators or moving averages. You need to think like the big money players. Do you think they are buying when RSI is under 20 or the MACD is crossing each other? No, that's not what creates the market. Market depth, the buyers and sellers, they create the price action that you see, and then the price action creates the indicators that you see. That's why focusing on the indicators is counterproductive. They are lagging indicators. Focusing on the leading edge, that is the market depth and the price action, gives you an edge, and that's all you need to focus on. To understand the breakdown of this strategy, we first simply need to understand support and resistance. And I know unless you are a beginner, you know everyone talks about this, but hear me out, it might just change your trading forever. Support is where the market tends to bounce, and the resistance is something where market tends to reject. So resistance is where the sellers are sitting and support is where the buyers are sitting. That's why the market bounces from here, and at the resistance it rejects. So what can help you to understand this strategy is that consider that a bouncy ball, like a ball, is stuck in your room. So this means that the ball is actually bouncing between the ceiling and the floor. In this case, the ceiling is the resistance and the floor is the support. But market also has a tendency to break out once in a while. The ball breaks out of the first ceiling and you have maybe a double-story house. So this is the second floor and this is the first floor. The second floor right here and the first floor. It breaks out the first floor. So now the ceiling of the second floor itself, this now starts acting as a new resistance, and this ceiling, the old ceiling, which was the ceiling of the first floor, the ground floor itself, this starts acting as support. Now the ball is stuck in between here. Eventually, it might break down or it might break out towards the upside. So resistance has a tendency to turn into support whenever the resistance breaks. And on the other hand, towards the downside, if the support breaks, the support will now start acting as resistance. And that's why the support and resistance levels are interchangeable. Now, have you ever asked yourself, why does this happen? There are sellers sitting at the resistance and buyers are sitting at the support. Buyers are trying to break this resistance and take out the sellers, but eventually they will break it. It might take them 2 attempts. It might take them 3 attempts. It might take them 4 attempts depending on the size of the sellers, and also depends on how strong the buyers are. Eventually you will get through. Depends on how strong, again, the market is, how strong the sellers are and how strong the buyers are. Now say for example, Iron Man is the buyer. He's trying to break the wall. It might take him 1 or 2 attempts and he's going to break the wall with very good momentum. After the break of the wall, he might just have a strong momentum in that direction, in the direction of the wall. But normies, like humans like us, normies right here, we might take 4 or 5 attempts or maybe even 10 attempts resistance. Eventually, we are going to get through the wall, but eventually when we get through the wall, we are going to be so tired that the momentum is not going to be there. So you guys need to understand that it depends on how strong the buyers or the sellers are. Also, if the buyer is really strong, the move after the breakout is going to be very big and it's going to be very fast as well. It's going to be bigger and faster. If the buyer is weak, we might see a weak and slow breakout towards the upside, towards the next resistance, and the same happens towards the downside as well. If the sellers are really strong, you're going to see a very big and fast breakdown. Or you might see if the sellers are weak, you will see a slow breakdown towards the next support. This concept of buyers or sellers being Iron Man or normies will be very important to understand our strategy. Now comes the concept of news catalyst. So if you're a normie and I tell you that if you take this pill, you're going to convert into Iron Man, would you take it? Similarly, for buyers and sellers, news catalyst is that pill. You might take this pill, and for the buyers or sellers, the news catalyst is that pill which will convert normie into Iron Man. And that's usually when the break and retest strategy taught by 99.99% of the other traders will fail, because you rarely get a retest. This means that when you see a break of a major resistance or support which is fueled by news catalyst, you get a very high win rate and, more importantly, very high risk to reward setup. Now, what was the DNA I was talking about? Because you actually use the market depth, the buyers and sellers, to get really good entries. Because the main job of a trader is to lower the risk and increase the reward, to skew the risk to reward game in your favor. For example, without market DNA, say you enter right at the breakout because you can't anticipate the breakout without using the market depth. Your reward is $50. This is your new profit target, and your stop loss is $10 because every trade is a risk to reward game. But with the help of market DNA, you can actually anticipate the breakout. You can see if the buyers have taken the pill or not. Are they Iron Man or not? Are the buyers getting aggressive or not? And you can actually lower your risk, say from $10 to $5, and your reward has increased by $5. Now, the beauty of mathematics, even though your reward has only increased by $5 from $50 to $55, but because your risk has went down by $5, that means your risk has been reduced from $10 to $5, which is 50% reduction in the risk. Your reward to risk ratio goes up exponentially. And now the new reward to risk ratio is 11, which is more than double the previous reward to risk ratio. That means you're risking $10 to make $50. Here, the risk is only $5 and you make $55. That is an exponential increase in the reward to risk ratio, and that's how the market DNA helps you. Let's summarize the strategy before we get on to the actual trade examples. The first point of this strategy is that you need a really good technical setup. You need a really good higher time frame range breaking. You simply need to find good support and resistances on the higher time frames like the daily, the weekly, or the monthly chart, and look for break on high volume fueled by news catalyst, which is the second point. And the second point is that you need to have news catalyst on that stock, like earnings reports or partnerships or something like that, which is the pill for the buyers or sellers to convert them from normies to Iron Man. And the third point, which is the most important point, is that you use the market depth to look for good risk to reward entries. With the help of this, you can often catch the extremes of the move, the high of the day or the low of the day, increasing your reward to risk ratio exponentially. Let's now take the first example, and we can see that how you can use this strategy to capitalize on really good trade setups. So UPST had earnings on 11th of February after market close, and you could see the reaction on 12th of February in the pre-market itself. Now, before we get to that action, the pre-market action, let's mark our resistances and support on the higher time frames, and this is the daily chart. We can see that this was the previous high, which is 88.95, but we can also clearly see that this was acting as resistance right here, approximately $81. We can see resistance right here, resistance right here, resistance right here, and I can mark this level as well if I want to. We can see resistance right here, resistance right here, resistance again, resistance again. This resistance turned into support for these 2 days. As I mentioned, once we break out of the resistance on high volume, the volume increased. The previous resistance is now acting as support. So we have these 2-3 levels near the $81. And now let's see what happened after the release of the earnings. On 11th of February, UPST beat the earnings by a huge margin. There was a beat on the EPS and the revenue numbers as well. If you look at the 1 hour chart, we saw a nice gap up. These are the 3 levels we marked on the daily chart on the higher time frames, and you can see on the 1 hour chart we gapped up. We had an insane volume in the after hours after the earnings release, and it was holding in between these levels. We can see that this level that we marked, $86, was acting as resistance in the pre-market, and this $81.80 zone was acting as support. And now here's a 1 minute chart of UPST, and you can see right at the market open at 9:30 a.m. we tested that 80 to 81 zone and pushed towards the upside. So yes, this was a good break and retest strategy. We marked the level on the higher time frames. We were gapping up above that level on the 1 minute chart. We wait for a retest of that level and push towards the upside. But we did not have a break and retest on the lower time frames. If you guys look right here, entering right at 9:30 a.m. looking for a higher time frame retest, it's not that easy. But if you focus on the market depth, because I actually took this trade, I had a really good entry right around 9:30 a.m. and right around the bottom of this candle. I made approximately $11,000 to $12,000 on this trade, which contributed to my 100K PNL. My entry was right near the lows right here because I was able to see that the buyers are getting really strong and buyers are getting aggressive near $80 to $81 level, and I was able to catch this push towards the upside. Now, if you traded shares on this stock, the stock moved from $81 to around $88 or $89 without giving any good pullback, so you had no reason to exit. That is approximately 10% move if you traded stocks. On the other hand, if you traded options, the premiums went from around $2.5 to a high of $6. That was a 300% return on the premiums if you had a good entry. If you waited for this opening range break, or maybe you entered right here at the break and retest, instead of your reward being 300% on the option premiums, it was only 100 or 150%. And that is the beauty of focusing on technical analysis along with some news catalyst, because this was a good technical level breakout, technical daily range breakout with the help of news catalyst. And now this was a really good example of this market DNA strategy in effect. If you look at the daily chart right here, this was a really good technical level breakout. This prior resistance started acting as support. We had a push towards the upside along with the market depth and news catalyst. So this stock was satisfying all the three conditions of this market DNA strategy. Let's take another example. This was on Meta. This was again after the earnings. It released earnings on 29th of Jan and we were gapping up on 30th of Jan. The good and bad thing about this stock is that this stock was already near all-time high heading into the earnings. So we don't have a lot of levels to mark on the higher time frames. We practically just have the yesterday's high or the 2 days ago high. So we don't have any strong support or resistance on the higher time frames because this stock is at all-time highs. And on these examples, it's very important to focus on the market depth because the break and retest strategy kind of fails on these examples. Now let's take a look at the lower time frames and the 5-minute chart and see the reaction of the news catalyst on this stock in the pre-market. Now here's a 1-minute chart after the release of the earnings, and we can see it had a wild reaction. We went all the way down to around $636, then all the way up to like $712. And then now at the market open, we can see that we only have the 682 zone that we marked on the daily chart. And we don't have a good break and retest strategy right here, but that's where the market depth comes into play. After the market opened up, we could see a pullback on this stock, and then suddenly we saw a huge increase in buying right here. We can see a lot of green, the volume increased. The bad part about the volume candles is that you can see the volume candle after it closes, right? You can't predict that this volume is going to be high or low. But with the help of market depth, I could clearly see that around 690 and 688, the buyers are getting really strong. I entered my position right around this candle. I added to my position right here for a good push towards the upside. And this is where the break and retest strategy fails, because if you actually wait for the break of high of the day, you never got a retest. But my entry was right here because I focused on the market depth as well. That is very important. And that's why the break and retest strategy fails when the stock is fueled by news catalyst, because you rarely get a retest because these buyers and sellers are now acting as Iron Man and you just get a straight momentum in either direction. Now, yes, a few break and retest strategy traders, they will be like, you actually wait for a retest. Then yes, I accept that. You can actually wait for a retest. You can enter right here, catch this push towards the upside. You can enter right here. You can catch this push towards the upside, but you can't argue with the fact that my entry was right here, and that's what I talked about, the risk to reward game. My risk was practically low of the day and the reward was this much. That means on the underlying asset, my entry was near 690 with a stop loss at 687. That is 3 points against me, and the reward was from 690 to 710. Which is 20 points reward with a risk of $3. And that's why my risk to reward was exponentially higher than the break and retest strategy traders, because I used the market DNA strategy. It was a really good technical setup. The first point is that it was gapping up above all-time high, which actually satisfies the first point. The second point was that news catalyst. Yes, this stock reported earnings. So this setup was fueled by a news catalyst and an increase in volume because of that news catalyst. And the third point is that I use market depth. I could see that buyers are getting aggressive near 690, I entered right here, making $35,000 on an investment of $32,000. I actually made a YouTube video about this trade, breaking down my entries and exits and how I was able to catch practically the high of the day. My exit was near 710 because of the market depth and the level 2 and the market DNA strategy. I'm going to make sure to link that video in the description box below. So I gave you guys a brief overview why in this market DNA strategy you need to focus on the market depth, the level 2, because with the help of this you can skew the risk to reward in your favor. I will be posting a lot more beginner friendly videos on YouTube related to this, but it takes a lot more time to understand. I have been trading for 6 years, but I mean, if you want to learn market depth in a dedicated mentorship program, fill out the form in the description box below and we will keep you posted. We are planning to do the 4th round of our mentorship soon, and in that I teach everything from basics to advanced. So you basically get my 6 years of knowledge in a matter of few weeks, and if not, just stay tuned on this channel, subscribe to this channel for the best trading education out there. Now I got a quick homework for you guys. Go and watch these videos on Tesla and ARM breakdown I posted on this YouTube channel. These videos will be linked in the description box below. Once you watch these videos, let me know in the comment section below the similarities you found between the trades we just discussed and the ones I talked about in these videos. And now the next homework after you watch these videos is to actually open your trading platform and look at the chart of eBay after earnings, which was on 8th of Jan 2025. Study both the higher time frames and the lower time frames. It's the same strategy. Finally, drop a comment if you guys have any questions, because I reply to most of my comments. If you guys don't follow me on Instagram, I post a lot of behind the scenes of a day trader on Instagram as well. The link will be in the description box below. Like this video. Thank you for watching, and I will see you guys in the next one.